What is up, YouTube, and welcome back to everyone's favorite series on Fridge Financials, in my opinion at least. It is crazy bets in the stock market, courtesy of Wall Street Bets. So, welcome on back to another video. If you are excited for this video, make sure that you like the video, subscribe to the channel, and turn on those bell notifications for all future uploads. A lot of money to be made, and a lot of money was lost this week in the stock market, and Wall Street Bets brings us some very big trades, both wins and losses. And again, the purpose of these trades here is not to insult people or stuff like that, just to bring educational awareness. Everybody's anonymous on here, so it's just here to bring the awareness that it is a market where you can win and make money, and also a market where you can lose money. So we'll get right into the first one here. The first person that we have here says no more health savings account, and you can see that he has lost $6,500 on the day, and it looks like he's trading SPY options, and it looks like they would have been expiring on Monday this week, and it looks like he closed it out. So trading short-term options, it looks like here. And here's the big problem that I have, obviously, with this. Health savings accounts are very, very valuable to us because they're tax advantaged. They have a lot of benefits to it. I have a health savings account, and I just buy S&P and QQQ in it and just let it kind of do its thing to grow and grow and grow over the time period. So that way, if I get a big medical expense and my insurance doesn't cover all of it, I can deduct from here, take it out, pay my bills, and not worry about taxes as much. There's a lot of tax advantages with a health savings account here. And this person was trading options with it. Now, is that a good thing? I personally would never do that with a health savings account because of tax advantages here. Or if I was to trade options, I would trade leap options maybe per se. But day trading or short-term trading with a health savings account to me just doesn't seem like a very good idea. And now he's down $6,500. And the thing to keep in mind about now is that say he had a medical bill for like 10 grand, he would have been able to pay off a lot of it with this money here, but now he will not be able to. So please be mindful with your health savings accounts. Use it for putting money aside for medical expenses because you never know what will happen. It's like almost like a kind of emergency fund, but not quite. But I've never seen someone day trade or short-term trade options with an HSA. So I thought that was really, really interesting to take a look at. On to the next one. This person said unlimited buying power play, and his discussion is completely inaccurate because it focuses on margin. But here's the crazy thing with it is that he has almost $5 million in open door stock at an average cost of $7.34. Now, if you go into this discussion post here on Wall Street Bets, he actually only has about 800, 900,000, some maybe even $1 million worth of actual cash, of actual value in his portfolio. That's his. So he is leveraged and margined out here. Now, here's the big problem that you will see here is that if Open Door crashes like a rock, because it is a meme play stock, as we know, if Open Door crashes like a rock, he's going to have a margin call coming really, really quick. And that is not very good. So he says this is an unlimited buying power play because basically you sell a covered call against your shares, use that cash, basically offsets your cost basis. But now, again, this ties it up until 2028. And you're not going to get much movement in this option strategy because there's so much time behind it. So it's very, very risky, and playing with margin is obviously not a big thing, is not advised to do. And playing with margin on a meme stock, no less, is also not something that I would advise you do. Obviously, none of this is financial advice, but that is crazy that he's at $5 million. It's got a lot of, likes and thumbs ups for the strategy here, which again is one of those things where you have to do your own research and not just blindly follow people here, because some of them make some really good trades and has some really good ideas. To me, margin with meme stocks is just not it. Moving on to the next one. This person said cashed out $30K on Tuesday, still out here doing DoorDash and Uber Eats while gambling the rest of the $40K on 0 DTE SPY puts. Okay, that's wild. So he still got $30K, which is good. He's DoorDash and Uber Eating, okay, while he gambles with 0 DTE SPY puts. Please be mindful, and we said this before, 0 DTE, 0 days to expiration options trades, no matter which ones they are very risky and can flip on you in an instant. We have quite a few of them here actually today in this video. That very risky. And I just thought it was interesting because he's like, I'm out here door dashing, Uber eating, trying to hustle and hustle and hustle. And he's going to put 40K onto 0 DTE SPY puts, right? So he's hustling for money to then almost gamble into 0 DTE SPY puts. I don't know how I feel about that as much. But, hey, I mean, if it makes him money, great. He catch out 30K, which is good. I don't know what his portfolio is at overall and what he's up or what he's down. I have no idea. But just a very interesting title to take a look at here. On to the next one. This person said, can I join the club now? And he bought, oh, good. You see these trades, and it's like unbelievable sometimes. He bought 104 contracts of AMD 245 calls that expired yesterday at the time of recording this. And he's down $13,000. And believe it or not, this was from Friday. He bought these on Thursday to go to 245. Basically, again, just almost a 0 DTE option or a 1 DTE option, and hoping that there's still some hype behind AMD after the partnership they announced with OpenAI, and just didn't get what he was looking for here. Again, one day, and he's down, $13,000, $14,000. Absolutely crazy, I mean, again, this is why I like to do my options, longer dated ones, manage them that way, so that way, there's time for the market still to move in a specific direction, and you're not looking for that jump to hopefully make money in that case. So very, very interesting play here, trying to get the hype behind AMD still looks like from the OpenAI play, and it did not work out. He lost $13,000. Hopefully he closed it and he made $800 back, but if not, he'd be down $14,000, which obviously is a big amount of money for a lot of people, myself included. This next person says, how cooked am I? And you can see that he's down a couple thousand in each of these investments here. Now, here's the thing to keep in mind about. He's got SoFi, QUBT, and Path. So QUBT, I believe, is quantum computing he's in. SoFi is finance, like it's like tech finance, whatever. There's a name for it. I forget what it is. Don't quote me on it. Then Path is another one that's one of those AI plays and stuff like that. And he's saying, like, how cooked am I? Honestly, dude, you're not, because you only realize these losses when you sell them, right? And he didn't sell them. He's got shares of these companies here. So even though he's down a couple thousand in each one, as if the market rebounds and these stocks rebound back up, he makes his money back, he's good to go, So he doesn't have to worry about the losses that you see now because he has shares of these companies. Now, could he sell covered calls in the meantime to kind of reduce his risk? Of course he could. If he sold covered calls already, these would actually be there. He obviously didn't because there's only one option we have right now. But if he sold, 6 covered calls here, 7 here, 11 here, the premiums he gets here could offset his portfolio loss. So it could actually, kind of slow down the loss he would get in his portfolio. But again, you're not cooked unless you actually sell and close those positions. As long as you don't sell and close them, who cares? Let it ride for a while. If you're bullish on the companies long term and you see a lot of potential with them, why not? Actually, when they're down, it gives you a chance to actually dollar cost average and to get in for cheaper prices, right? So don't feel like you're in a lot of trouble because you see all the red here when you have shares. If it was options, different story. Shares, we have a lot of time. This next one says down $200,000. And I'm guessing that it seems like he bought into all these companies here at peak values, it looks like. RGTI pumped up like 20-30%. I think he bought at the high. Riot pumped up, Iron popped up, Big Bear AI had a huge pump, NVTS. Like all these companies had big pumps over the last couple weeks. And I'm guessing it looks like he just bought in at the worst possible time. It looks like he bought on the high of these stocks here. So, yeah, you can't time the market here. And here's the thing to keep in mind about, right? When you're playing with these companies here, especially right now, we're at market all-time highs, or we're pushing all-time highs. We're close to all-time highs. A lot of these companies are at the all-time highs that we have right now, and we have rate cuts coming with the government is shut down. The labor market sucks right now. Like, we're due to have these kind of correctional periods here. So the fact that this is kind of what happened, I would have, done even if he bought in like half, like 500, he bought in like a little bit of each share here. You could have bought in on a red day on a dip because we were bound to have a pullback. We're bound to have correction because this market is pushing up full steam ahead, but the data doesn't line up with it. So very, very bizarre, unfortunate, but you know what he could do? Cover calls. You get the idea behind it. He could do it and offset his losses as a result of it, or mitigate his losses, I should say, because he would profit from the premiums. This person right here, futures trading isn't that hard, up $50,000. And the reason why, first of all, shout out to you for making money on futures. Okay, futures is hard. Okay, it is hard. I don't know what this person might be thinking. Saying, "Oh, it's not that hard. I made 50 grand." Well, yeah, of course. But here's things to keep in mind about, right? If you're saying that it's not that hard, it is. If it was not that hard, everybody would trade futures. Everybody would be profitable from it. The reason why I put this up here is because don't believe what people say on the internet is true. Futures is not hard. I'm someone who's been, very heavily invested and, reading up on articles and researching on the stock market, on economics for the last, 5 years now at this point. And even I still don't truly feel confident to try to trade futures. I would love to trade futures because it's after hours and overnight where I'm not at work teaching, but it's something that I'm just not comfortable doing just yet. And that's the big problem that I feel like we're facing is that people just say, oh, it's not that hard. Yes, it is. He just snapped his fingers and he made 50 grand, right? And here's the thing, right? Who knows if this trade went against him, he could have lost a lot more money than he thought, right? So don't believe that people say futures is easy. Futures is not easy. But shout out to you making 50 G's, my friend. That is amazing. Obviously, there's margin, there's leverage, which can lead to margin calls and all that. Very, very risky stuff that you're seeing right here. So keep that in mind if you want to trade futures. Do a lot of research, a lot of investing. Somebody did ask me to make a video about futures. I may have to look into it at some point. I'll be making a video about the futures market and how it works. That way, in case you ever want to look into it, maybe I'll be a good resource for you as well. So if you're watching this and you don't want to miss it, subscribe to the channel, of course. Moving on to the next one. Been an absolutely terrible month with 0 DTE QQQ options. And I can just tell you right now, I put this in here just because no crap. 0 DTE is never the way. It really isn't. Like maybe 1% of traders make money on 0 DTEs consistently, day over day, month over month, year over year. No matter what. It's gambling. It's very risky. It's very gambling. It's very gambly. That's not a word, but it's very risky trading that you're doing there. So no crap. Terrible month. It'll be a terrible year. It'll be a terrible lifetime for 99% of us, myself included. I'm not someone who's an expert at trading 0 DTE options. I'm not. But, some people are, and I'm not one of them. But, again, take your money and just buy leaps, sell options, whatever it is. You make more money long-term probably than 0 DTEs. This is just crazy. This is a $10,000 Coinbase YOLO, bought on the 16th, expires on the 17th. I would have already sold it right here, honestly. That's just me. But, good Lord, man. I would never have the confidence, personally, to throw 10 grand into a trade that expires in one day. And that's just me. Maybe he's got, $5 million in his portfolio, and this is like chump change to him, maybe. I don't know. But just dropping 10 grand for a one-day trade and just hoping that it hits is crazy to me. But, I'm hoping that he made some money on it. I don't know if he did or not, but at this time of this picture, he was up money, so hopefully he did make money as a result. This person, actually, I had put 2 screenshots in. He has 2.15 million. Actually, it's more like 2.5 million in gold right now. 2.5 million in gold call options that expire November 21st and December 21st combined here, right? Now, things to kind of keep in mind about with this, right? Gold is pushing all-time highs. Gold is at the highest it's ever been valued at, and usually gold does very well and when markets are unstable as a result of it. Everybody floods to gold and to, ETFs around gold and all those kind of things there because, gold is something that is there's a fixed amount of it, so people flood there usually more when they're uncertain in the market. So this person's made combined like almost $400,000. Honestly, I wouldn't mind closing it now and taking profits out because with gold pushing higher and higher, who knows when it's due for a correction and when it pulls back. It could be soon. It could be in a couple months. I would at least take some money off the table, which I'm sure he probably will be doing at some point. But yeah, gold was the play this week. Gold has been rocketing up the entire week because of all the volatility, all the uncertainty we have in the markets here. So this man or woman, whoever it was, made a lot of money, and shout out to you. That is absolutely amazing. This next person said, bull market canceled because I bought calls. And I'll tell you guys this right now. I went into the screenshots. You know what he bought? 0 DTE options. 0 DTE options. Why? He's down 20 grand today. This whole week for me, this week on Wall Street was a lot. I saw a lot of 0 DTE options. And I don't know if it's because of all the volatility we faced from tariff wars and then, this and then this, like all these different data points came out over the week and stuff like that. The labor market still hasn't given us data yet. We have the Fed. People are talking about having more aggressive rate cuts and all that kind of jazz. And who knows what else is going on these days. And people are trying to take advantage of those big moves in the market. But man, if you're not careful, like this person is right here, down $20,000. It's crazy. This person put in 100. Oh no, like 90,000. Sorry, 90,000. This dude put in $90,000 all in on BMNR, and it's 100% portfolio. Okay, I mean he's up $7,000, so shout out to that. I would start selling cover calls maybe, or take some profits off maybe already, because I mean again, markets are all-time highs, and if you're going all in on companies that are already pushing all-time highs, I don't know what that's going to mean for you. Just be mindful, say something to hedge your portfolio a little bit at least. Cover calls is a good hedge on your portfolio. So that way, if BMNR goes down, you lose value. If it goes up, you're able to sell off your shares for a profit. And no one will complain about that. No one wants to complain about selling shares for a profit. Another all-in play here. Again, same kind of idea. This person was not all in, because it's actually 53% of his portfolio here, but he put in, $100,000 into Webull stock. So that's very cool. Now, Webull stock has come down quite a bit recently after, at the time of recording this video here, down to about like $11 and something cents a share, basically around here. But again, all in, quote unquote, all in, it's not. It's half your portfolio. So you actually have a $200,000 portfolio, unless maybe is it factoring in leverage? I don't really know. But things to keep in mind about with these kind of trades here, going all in on stocks when markets are at all-time highs or pushing all-time highs is not a good idea, in my opinion. Especially a company like Webull, which is a very risky, very volatile stock, which can move in either direction, either way, very, very quick. I think yesterday it was down like 5%. So, keep that in mind when you're looking at these all-in trades here. I would do an all-in trade if we bottom in a market, right? If we start seeing the bottom in the market form and we start to kind of push back up, that's when you can do an all-in more or less. But I wouldn't do all-in anyways, in general. But, that's just a crazy trade there. And ideas keep coming here, guys. All in on ROBN. And if you don't know what this is, I could be wrong, but I'm almost certain it isn't. This is a Robinhood leveraged ETF. I'm almost certain it is. If you are all inning not only into a stock, $40,000, first of all, if you are all inning into not only a stock, but a leveraged ETF when markets are all-time highs, you are asking to lose some value quick, in my opinion. You are asking for it. And I hate to say that because I want everybody to make money here, but if you are buying leveraged ETFs where markets are all-time high here, you think they're going to keep pushing higher and higher and higher, especially with the government shutdown, especially with labor markets sucking, especially with rate cuts coming because of fear of inflation and stuff like that and everything else is going on here. There's all these uncertainties in the market right now. And you're like, you know what? All in, leveraged ETFs, easy. It's like, this could work out. I'm not saying it's not, but man, that is risky, and, hopefully it works out, but goodness gracious. This person said successfully freaked out all day to lose my whole earnings I made over the last week. Person made $26,000, almost $30,000 in the last week. And then looks like they probably lost it all in a 0 DTE YOLO play. That is crazy. Yeah. Another 0 DTE, another account where people just lost their portfolio because of it. I think someone commented, like, at least I'm up 54 cents in the after hours. It's like, yeah, look at the positives. Crazy. Oh, I skipped one. Whoops. This person says, do we got a chance? And the reason I put this in here is because he bought options on GameStop for some reason, which is interesting. And it's 2 weeks to expiration at the time. This was expiring yesterday here, but my dude put in like 10,000, almost 8,000, $500 into GameStop. I forgot GameStop was even a thing, honestly. I just thought it was interesting, but he basically put a lot of money into it. And yeah, looks like there's no chance for that one. Down 96% of his portfolio. Again, giving yourself 2 weeks for an option play to work is risky stuff. And if you're not happy or not comfortable losing $8,000, then don't do it, right? But this is me. This person on a stock that has been the craziest stock, I think, to the date this year, OKLO. He's made $69,000 and he put nice. And I love that for him. Average price, $28. It was up as high as like 180, 190. This is a company that has nothing produced in revenue and has skyrocketed from like $20 to 180, 190 bucks because it's like a nuclear play in the energy sector and all that kind of jazz, and all that stuff's been going great. Let me tell you right now, if I was this guy right here, I would sell at the money cover calls right now. Or I would sell in the money cover calls. So that way, even if it comes back down, you get a sign, because the IV on OKLO right now is crazy. I've been thinking about wanting to sell like options against the upside because of how much it's rocketed up. And I just don't know, because IV is crazy and it's not worth the risk and reward. But good Lord, man, I would take this out quick, or at least hedge your portfolio, something. Crazy returns. This person said linear loss strategy. Flip my strategy for max gains down 128,000 all time. Woo. That is crazy. Imagine being down 128,000. That's easily like, a good amount down for a house that you could have. Just lost it. This person says, I know what I have to do, but I don't have the strength, and he spelled strength wrong, to do it. Iron, he's up 10 grand a year and 20 grand a year. Iron has been a company that has skyrocketed a lot recently because of buying up NVIDIA chips to go into AI, to go into mining Bitcoin, like all these different things that Iron's been playing up here. And it has skyrocketed to like $70 a share. And again, as we talk in a lot of times here, what goes up has to come back down. And when the person says, I know what I have to do, but I don't have the strength to do it, that is a gambler's mentality right there, in my opinion. If you're up $30,000, you're up 3,000% here. You're up 84% in your shares. And who knows when you bought this? Probably not too long ago, or probably, within the year, I would guess. If you have all that, yeah, you definitely bought it like earlier this year, because Iron was way below 36. I remember watching a video, someone covered it. It was like $20 a share. If you don't have the ability or the strength to close your positions, you're asking to lose your money and to lose your bets and to lose it all. And it's a gambler's mentality. And, and I'm happy that this person made a lot of money here. But if that's the gambling mentality you have right now, I don't know how much you can sustain having profit in your portfolio if you have this kind of mentality. I would be taking profits off of these shares and this option contract so quick. So quick. He made 20 grand on one option and 10 grand on his shares that were worth, I don't even know how much they were, $13,000. So that's just my 2 cents, obviously. This person, shout out to this person right here, and he showed both sides of this. Don't be greedy and take your profits when you can. 1013 SPY calls went from up 20% to down 95 within 1 hour. And again, this is 0 DTE options here, but this is the risk that you see with trading 0 DTE options. He was up $2,000, and then he flips over to the other side. He was down like 8 grand. So it was like a $10,000 swing he had in an hour of this market. All it takes is one Donald Trump tweet, or who knows what, or a post, or some crazy news about tariffs, and this market flips. So this is a very good example, and I appreciate this person sharing that, saying take your profits when you can, because again, he was up 2 grand and then he lost 8. 2 grand pays like your rent for a month. 8 grand is like 4 months of your rent, maybe, So that's crazy, but I appreciate him being transparent about it. And I believe this is the last one here, because we can't end off the day without having somebody have open door call options expiring yesterday, and his profit loss is down $123,000. Wow. This goes to show you guys that meme stocks are not the play. So thank you guys so much for watching today's video. If you made this far in the video and you like these kind of videos, make sure that you like the video, subscribe to the channel, turn on the notifications as per usual. As always, I hope you make money in the market, and I hope these are giving you guys some good learning experiences, both good and bad, from people on Wall Street Bets. So that way it helps build your own kind of knowledge and, information and due diligence and research and all that kind of stuff to help you be successful in the markets. And as always, guys, I will catch you guys in the next video.